for November 9th. That'll be the next supply-demand report. We will not be using our crop condition model, of course. As you noted, for the first 3 months of this marketing year, or first 3 months of the model itself, July, August, and September did a bang-up job in estimating yields. It ran about a bushel or so higher than what USDA had during that time. However, of course, the October decision was certainly a clear divergence. I just want to point out, obviously, we're not going to use this model here for this November estimate. Instead, what we are going to look at is that the slight decline from last month. We've mentioned earlier in the last week's report that when you drop yields on the October report, which is unusual, they usually drop them again during November. And we're going to estimate a small decline here, about 0.8 bushels, as far as a corn yield down to 155.0 for the November report. And actually it's very conservative. Usually we drop about a percent or so during the slight decline years, and that actually put it down to 154. So for right now we're using 155.0 for our yield end. The other thing that's kind of helping us market right now is not just the idea of a dropping yield, but what's going on with this export market here, mainly China. Last few days, especially during last week, we started hearing some rumors that, you know what, China's going to get ready to buy a whole lot of corn. Estimates were on Thursday, Friday, they're talking for 1 to 2 million bushels. This morning we see the talk as, oh, they're going to buy 2 to 3 million bushels in the next few weeks or whatnot. Just want to point out, we've got some big divergence of opinion here. Actually, year-to-date, USDA, last year I should say, purchased 1.2. That's up through August. Numbers so far, so September to current, the new marketing year. I've just got there a nice little table for us here. USDA has a conservative 1 million ton estimate. So USDA is saying something very close to last year. We've got groups, in fact, the highest estimate so far is this JC Intelligence. They're out of Shanghai. They're a Chinese firm, and they're one of those guys, kind of a screwball firm that always had some crazy production numbers, always low production and very bullish outlook. These guys have something 7 million tons. Now I'll kind of point out the divergence in terms of what this means for us for bushels. Anywhere from 39 to 276 million bushels for this big question mark China. So here's what we have right now kind of laid out. We all know that exports in the past few weeks have really stunk for corn. Actually, we're running at least 200 million bushels behind what USDA hopes. However, with this big question mark with China, in other words, China's thinking of buying some heavy corn, what will USDA do? That's the biggest question we have in mind right now. So let's lay out the balance sheet we have laid out for November so far. We do have a drop for yield and a drop for production, and taking about 68 million bushels off production. For right now, I mentioned earlier that this export number, which USDA currently has at 2 billion bushels, we're going to drop it by 50 compared to USDA. And honestly, I'd like to drop that thing even more. But given what we don't know about this China issue, I'm not sure how much we can drop it. So for right now, we're going to say a slight decline from 902 down to 882 million bushels. That's where we're sitting with right now. There will be other firms probably with 850 or even below. So keep in mind, much of the trade is probably going to have a lower number than this for the November report. Keep that in mind. As far as price outlooks, we're still saying 650 for our objective for corn right now on the upside. For trading on the corn, we do have a bull call spread. We're long a January $6 call and short a December $7 call.
Hey, Rich.
Yeah.
On this today, they gave us a new estimate of China's production, don't they, on the November report?
They will.
So that could be one of the most important numbers on this. Maybe is not so much our own yield, but what they're looking at for China.
Certainly could. Brian Split made a good point. He asked, well, what about this China production? And has mentioned that USDA may make an adjustment on this November report for China's production as well. So he just made a point saying it might be important to watch this world number 2 for China. For the soybean side, we got one really key issue right now, and that's soybean sales. Here's a simple fact: is right now we've booked so much aggressive right now, not only pre-harvest bookings, but also in the last few weeks post-harvest bookings. Up 14% is our year-to-date sales number here for export sales for soybeans. And I wanted to point out, this is kind of interesting here, we're up 14%. USDA only has a slight increase from 14.98 up to 15.20. I believe that's like a 4 to 6% increase. So we're running 14% higher year-to-date. USDA says only a slight increase. You know what? USDA is far too low. We're going to be very conservative and say increasing by about 30 million bushels for next month's report. That's going to drop this number on ending stocks 265 down to about 229. This is not a tight number by any measure at all. Still 200 million bushels. And look, it's even tight. It's even larger than last month's or last year's is 159, and even larger than the 138 from 2 years ago. So we all know that the stocks number is not bullish at all by itself. However, the simple idea is we've been declining stocks for a few months. That's what's bullish right now. Heck, we were just 350 just a couple months ago. So with this number, we still expect a little higher trade. We're still using $13 as our objective for January futures on the